Hello, this is Larry Tentarelli with the weekly markets video for Blue Chip Daily Trend Report. Today is April 13th, 2025. We'll start with the disclaimer, which says that everything in the video is for informational purposes only. So it's a much better report this week than we had to talk about last Sunday. So there's a lot that I'm going to go into. I'm going to try to keep it timely. So we'll start with a few things. The weekly outlook. There are three key bullish developments to report over the past 72 hours. So I'm still maintaining somewhat defensive positioning. These charts have some work to do, but it's definitely an improving outlook. So three major things I want to talk about. So the S&P 500 just put in the highest weekly volume in 14 years. Similar volume spikes in 2009, 2010, 2011, and 2020 marked major market lows. In 2008, the market did trade lower after a volume spike. We do have a Fed backstop right now. I'll talk about that in a minute. And the White House announced that quite a few electronics items, smartphones, computers, semiconductors, are going to be exempt from tariffs. So we're going to talk about all of these things. So they should all continue to take selling pressure off the equity markets. But here's really the biggest one that I'm looking at right now. And I shared this chart online. So the S&P 500 last week had the highest weekly volume going all the way back to 2011. And what I look for when we get a major sell-off like we've had over the past few weeks, what I look for, number one, for a reversal is a very high volume selling flush and reversal. That's exactly what we got. This did come on maximum pessimism. It came into an extremely oversold market. So I don't make predictions, but what I will say is based on what I'm seeing in the market right now and how the market's reacted at similar times. So we can see massive volume in 2008. That did not hold, and then it went lower. I would say, having been through 2008, that 2008 was probably the most uncertainty that I've ever felt in the stock market. 2008, for those that were investing at the time, was an extremely difficult period, and it took a massive global effort to get us turned around. Other than 2008, we saw massive volume, a big volume spike here at the 2009 lows. We saw a big volume spike here in 2010. That marked the low. We saw a major volume spike in 2011. That marked the low. And then we saw a major volume spike 2020. That marked the low. So my experience has been is that major bottoms are put in with extremely high volume selling flushes and reversals. Now, with that being said, there's a couple things that we need to be focused on, because keep in mind, charts by themselves cannot predict the future. They can't predict news flow. So from a fundamental perspective, I still have some concerns about the volatility of this tariff news cycle. Right now, we've got a lot of positive developments over the past few days, but by the same token, at any time we could get a major negative headline. Maybe China doesn't agree with whatever we're trying to, as far as compensation or negotiation, or it could be from anywhere. It could be from the White House. So we don't know what we don't know. And I do have some concerns about potential economic uncertainty, because whether there's a tariff pause or not, or if tariffs are only 10%, I still think there's enough economic uncertainty about what cost structures are going to look like and what the labor market is going to look like. So I still have some concerns there. We have to pay attention. So I'm not going out and etching into concrete that this is the absolute low for this pullback, but I will say, based on what my personal experience has been over 27 years or so, is that when major bottoms are put into a market, this is exactly what they look like. Very high volume, selling flush and reversals.